In today's video, we are going to talk about market structure and how you can learn this and apply this on your real life charts. So let's get straight to the video. So what is market structure? What you will learn in this video is what is market structure, how to read bullish and bearish structure, what is a break of structure and a market structure shift, and how to use structure to time your entries and exit, and real life chart examples to lock in your understanding. Alright, so what is market structure? Market structure in trading refers to the overall framework or layout of how price moves on a chart. It helps traders understand the underlying trend and recognize potential turning points by analyzing highs, lows, and the flow of price. Now here's a quick simple breakdown. We are going to jump to the charts, but let's just do a quick simple breakdown of the key elements of market structure. Number one, higher highs and higher lows is an uptrend, and that means buyers are in control. The price is pushing higher over time. Vice versa for the downwards. Lower highs and lower lows means it's a downtrend and that sellers are in control. Now equal highs and lows or sideways price means that the price is consolidating, that it's ranging, no clear direction, price is stuck between support and resistance. Now why does market structure shift matters? It helps identify the trend. Are you in a bullish, bearish, or ranging trend? It reveals liquidity zones and potential breakout levels. It's the foundation of price action trading. Many strategies like order blocks, fair value gaps, breaker blocks rely on reading structure correctly. Alright, so when we look at these two pictures, here you can see we are in a bullish trend and here we are in a bearish trend. Now you will identify if market makes higher highs, higher lows, higher highs, higher lows, then we are in an uptrend. For example, this low did not break the previous low, but it created a higher high, and this low did not break this low, but it created a higher high. Same with bearish. We got lower lows, lower highs, lower lows, lower highs, lower lows. So that means market is in a bearish trend. This high did not take out that high, but it broke this low. This high did not take out this high, but it broke the most recent low and created a new lower low. So this is a nice simple example of how market structure looks in an uptrend and a downtrend. Alright, so when you look at here, you will see the higher time frame I made in yellow, the lower time frame in a blue. Now, as you can see here, this yellow line represents a higher time frame. This is basically one of those legs right over here. And then the lower time frame inside of this big push. On a lower time frame, there's going to be the same market structure, but just on a lower time frame, creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and so forth. And here you can see we had a change in shift. We had a shift in the market structure right over here. So now this low took out this lower high and created a higher high, higher low, higher high, higher low, higher high, higher low, and eventually price breaks the higher time frame, in this example, the higher high. So external, internal, and then we have this big push again that's going to make the next leg. So here you can see again we have our higher time frame, and as we move down we have internal break of structures moving to the downside. As soon as we break this previous lower high, we have a market structure shift, or a lot of people in the smart money world call it a chock, a change of character. And then we have our break of structure in the internal trend moving higher. That's creating the higher time frame break of structure. So here's a nice example. Higher time frame is the yellow, low, high, higher low, higher high, higher low, higher high. We broke down. We had a higher time frame market structure shift, and we created a new low right over here. And the blue represents the lower time frame. So in these big moves, you have a lower time frame that goes high, low, high, low, high, low, and you have your internal market structure shifts as well. And as you can see, this is how price will look on your lower time frames following a higher time frame trend. So when you look at this piece of price action, you can clearly see we have a lower high, a lower low, big push down. So this is your range, and then everything inside is going to be internal liquidity when we go to the lower time frames. So we have our bigger time frame push. Here you can see it's a trend down, up. Here we actually created a lower high, and to confirm this lower high, price here needs to break the higher time frame lower low. So the reason I marked this out as the lower time frame break of structure and market structure shift, when you go to the lower time frame, as you can see here, you can clearly see this was that big push right over here. Then we had all of this piece of price action. When we zoom in, you can see right over here there's lower highs, lower lows being created. Price moves up, up, down, up, down, up, down, following the higher time frame trend. Same when we come down, up, down, up, down, up, down. And then you get, even if you go more lower, you get your lower time frame on your lower time frame internal liquidity. So if this is going to be one leg, everything inside of this high and this low is going to be internal market structure until we break the higher time frame high. As you can see here as well, we have a high, low, and then everything inside of here is internal liquidity following structure. So let's just recap. Higher time frame structure, price is fractal, and then when you go to a lower time frame, you can see the same price, but look how different the chart looks. If we put it next to each other, you can clearly see how it looks. Higher time frame, lower time frame. So here's much more moves where you can capitalize on your intraday trades if you are a day trader by following the lower time frame market structure shifts and market structure. So it comes basically down to this one again. You have your higher time frame and your lower time frame moves inside of your higher time frame. Now let's say, for example, you are unsure on how to identify it. Yes, it is going to take a lot of time to practice if you don't understand, but I've got you covered. If you want something to assist you by drawing out this market structure, you still need to do your own. This is just going to assist you in drawing it out. You can type in on indicators Flux Chart, and you will see Flux Chart has hundreds of indicators, free indicators and paid indicators. The one where this market structure is helping me is going to be the Flux Charts price action toolkit. As soon as you are inside, now you will see this one, this indicator will help you identify your break of structures. Like I said in the beginning, change of character, that's your market structure shift. You have everything break of structure, market structure shift. Now we're moving down, it's creating the lows. When we look at this piece of price action right over here, it draws out your market structure really neatly. If you struggle to identify break of structure, change of characters, all of those things, equal highs, equal lows, this indicator does everything for you. Go check it out. Link is in the description. Flux Charts Price Action Toolkit. Go check it out. When you are inside, this is going to be the settings. So here you can change your swing length. This is going to be basically how often do you want this to show. So the higher it is, the less it shows. The lower it is, the more it shows. You just need to go play around a little bit to see what setting works for you. Here's one more example, as you can see, really neatly. And if you add this to your own trading with your own markups on your charts and everything like that, and you're going to use this indicator as an extra confluence, this is going to put you on the next level of your market structure by understanding how it works and how to draw it on your charts for your trading. Alright, so link is in the description. Go look at Flux Charts, the price action toolkit. I hope you enjoyed this video. If you like this video, please leave a like and subscribe, and then I'll see you in the next one.